a flight from Florida to New York, if it's 5 degrees off, you end up in Washington.
To invest in a VC firm, historically, you had to be wealthy already. You have to be an institution, right? And that means you had to have had maybe some kind of exit with a previous company. VCs are working for other people. They're managing other people's money. So they're trying to find the best deals that give them the best returns so that not only can they prove to their investors, like, look, we know how to find startups, right? But also they want to make money themselves.
Hello and welcome back to the show. Welcome to Hustle Over Everything. This is the podcast where we receive stories, tips, and tactics from entrepreneurs who have
money.
done it. I'm Alex.
And I'm Owen Osende.
And today we have Bison Venture Partners in the building. We have my guy, Garry Johnson III. How you doing, bro? How are you?
I'm doing great, Alex. Owen, thank you for having me.
Man,
I feel like I
a long
made
time
it.
coming.
I feel like
I made it. Stop it.
I can retire now. I'm good. I made it to Hustle Over Everything.
You're on the HOE pod, man. You made your appearance. Time to hang it up.
That's it. I can leave the game happily. You know what I mean? I'm good.
Yeah. Don't kill me, man. But yo, to get things started, man, I actually want to talk to you about a few trending topics because there's a few things in the community that we're all kind of conversing about that I think could be good to get your opinion on. And I also want to talk to you because before we started the show, we talked about being from Howard and at a PWI. So I'd love to talk to you about that in a second as well. But to start with some trending topics, recently Miel, if I'm pronouncing the word correctly, just got sold, right? And there was a lot of people that were like, "Oh man, another company gets sold to." I think it was Procter and Gamble that sold it. I mean, that bought it. Pardon me. And they're like, man, another company that got bought. If you don't know, Miel is a Black-owned hair care line for women predominantly, and they're now bought by Procter & Gamble, one of the biggest product companies in the world, right? What's your opinion on that exit? I would love to get your thoughts there.
Yeah, I mean, my opinion is that it's a win. It's a win for the community, right? When we all start our own businesses, we have to think about what our goals are, right? Our personal goals, what our family goals are. And I think a lot of us, especially as Black entrepreneurs, we're thinking about our legacy. We're thinking about generational wealth. How do I start something that can provide for my family for generations after I'm gone, right? Mm-hmm. And when you think about what success looks like with a business, there are many different ways to achieve success, right? For some people, it's growing it to a certain amount of revenue per year, right? And for some, like making $100K a year is success, right? And that's totally fine. For others, building $1 million brand is a goal. For others, it might be, I want to be a billionaire, right? But everybody has their own goals and different ways to get there. With Miel, right, they had an exit with their business, right? They were able to sell it to a much larger company, right? So they put in the blood, sweat, and tears to grow their small, consumer packaged goods brand from where they started to where it is today, to where a huge company like Procter and Gamble would want to buy the whole thing. And that's incredible. That proves that Black people can build scalable businesses, right? That can sell their products in many different stores, with Walmart's, Targets, whatever, all the big outlets are. And then I think what's cool about what they did, which maybe a lot of people don't know, is that they didn't just sell the company and give the rights away to Procter and Gamble to do whatever they want with it, right? They are at the table making the deal, right? So their deal, to my understanding, is that the founders are basically operating Miel as a subsidiary of Procter and Gamble, right? So Procter and Gamble has a huge number of different brands in its portfolio, and each one is run by its own CEO, right? So the Miel team is still running that brand internally at Procter and Gamble. So they still have control over the direction of, where that company goes, right? So that's a very good thing. And just, thinking about the terms, they sold the company. So I don't know how much they sold the company for. If it was an undisclosed amount, that's great. That's amazing. It's always funny when you try to, dive deeper and see how big of a bag did they get off of this sale, and you can't find anything. I would love to keep it that way too, right? Like keep people guessing. But the impact of that sale has yet to be seen. For one, Black entrepreneurs are looking at that and saying, oh, wow, I can build a brand that solves a real problem for my community, right? And there may be people who tell you, oh, your customer base isn't big enough if you're only serving, black and brown people, black and brown consumers. Miel just proved that no, this is a huge market opportunity. There's much more room for growth, and large companies recognize that value. So that's motivation and inspiration for other entrepreneurs. And then, I think what we'll see is that the founders of Miel are going to do a lot of great work, with the outcomes of that sale, right? So for one, their family, I'm sure, is set up, right? They've got the financial capital to take care of their family, right? Generational wealth should not be an issue at this point. But I have no doubt that they'll do a lot of good in the community, just, whether it's through programming, through donating to different programs, and all that kind of good stuff. But I want to see more of that. I want to see more black entrepreneurs starting businesses, growing those companies, and, selling to a larger corporation is definitely not an issue if you negotiate the right terms.
Gary, that's a problem with me, man. I'm gonna give you some pushback on that. See, the problem within our community, right? It's like we always talk about this idea of like building companies and having our own seat at the table. Like if you look at all these major conglomerates like Johnson & Johnson, who's another one? Let's stick at Johnson & Johnson, right? And I felt this the first time when Tristan Walker sold Walker & Company to Johnson & Johnson at the same time, because
Procter &
Gamble, Johnson & Johnson, all these two major conglomerates, right? He sold to P&G. So he came with a premise of changing the game. Like, this is going to be Walker & Company. He's going to have Bevel. He's going to have Foam. He's going to have all these different brands. And eventually, within 40, 50 years, Tristan Walker and Walker & Company are going to be in that conversation as a Procter & Gamble and a Johnson & Johnson. And to get to that level, there has to be some level of like restraint from deciding to sell to the P&Gs and the J&Js because they've got the fulfillment, they've got everything. It takes people like Tristan to have the guts to be like, okay, I've started this brand, I've launched 2 brands, it's serving the community, let's just keep growing and growing and growing. And then eventually when another black founder wants to sell a company, instead of going to Johnson & Johnson and Procter & Gamble, you go to Tristan Walker. Same thing with Meow over here, right? You can go to them. So my vision is to not always grow so big and then sell fast. I think my premise is let's have a long-term vision and long-term thinking of, let's think about the next 5 to 1,000 entrepreneurs who are going to build legacy companies, and how can they be under a black umbrella. And nothing wrong with going to P&G and J&J, but there just has something to do with like that whole community build where we can still hold on to something. Because if we're building to sell businesses, then how can we really, and of course Meow is still controlled, but hiring other people in the community, be like, okay, we're hiring you because Walker & Company hires 2,000 people within the Atlanta, Georgia area, right? And that's how I'm seeing. I don't like the idea of selling and then, okay, my family is set for life and whatever, but these other people could have been under you and you could have given them that direction instead of going to P&G. I just think it's great to sell, but I think we need to have like a different mindset of staying within like our own and then building it to a large conglomerate like them, and then bringing other entrepreneurs on board too.
Yeah. No, I don't disagree with you. I think we need both. That's how I view it, right? We need both. And I think with Tristan, it's different because, I was, studying Tristan Walker for a while and
same here.
Heavy into his interviews, all that kind of stuff. Yeah. I went to a black entrepreneurship conference at Stanford, and he was interviewing Richelieu Dennis of Shea Moisture, right? Mm-hmm. Incredible conversation. And with Tristan, I think it's different because with him, it's like, I've heard him say we are building the black Procter & Gamble, right? I know that was his goal, right? Or at least what he was saying publicly. With Miel, I don't know what their goal was, right? So I think it's a little bit different. Just going back to whatever your personal goals are. But I also wouldn't limit any of these founders to either of these brands, right? Like I could see, and I hope there comes a day where the founders of Miel start a company with, Tristan, right? And Shea Moisture, and all these companies come together and they take whatever proceeds from their exits and they can build together, right, our own version of Procter & Gamble, right? Whatever that might look like. And I think there are some examples of that with like, there's a new firm I found out about called Pronghorn, and they're for the spirits industry. Black-owned spirits, right? So there are a bunch of different Black people in that industry who are trying to increase representation, increase access to resources within that space. And what it takes to build a P&G is a lot of money, a lot of knowledge, a lot of connections, a lot of expertise. And I think the only way to get there is by having exits, multiple exits, right? And then combining resources. So hopefully in the future, we see founders from different companies coming together and building that conglomerate.
Yeah. And, you know, this comes from like us as a community being like, they say we're starting 100 yards back. You know, our starting point is way, way behind. So to get even to that point, it might be even be past our generations to really see that vision come to life.
For sure. Yeah. It's a sacrifice all around. Right. And we can't see the full picture, like you're saying. So I think time will tell, but I'm happy to see these exits. Like we need some version of exits, and it like access to capital is so hard to get as a Black entrepreneur, right? Like I can't even imagine what Tristan, what the founders of Miel have gone through and are still going through to operate their companies, even like getting them to where they got before having an exit, right? I'm sure they got to a point where it was like, this is going to take so much more, and people in our community do not have the resources right now to help us get to that next level. So you have to make some kind of sacrifice.
And I think one of the biggest things that Procter & Gamble has is that distribution. You know, they have distribution on a chokehold. It's hard to get into all those stores while managing, you know, the quality of a product, you know, and maintaining like the safety of the product as it distributes out. But now, another thing that I think is definitely worth mentioning is the results of having a liquidity event in both of relationships and the prowess that gets, you know, established with that, as well as the ability to go forth and create new things from that liquidity event, you know, after selling. Just like if you look at Elon Musk, for example, you know, after selling his first company, then joining PayPal and having another liquidity event, and then joining another company and creating Tesla. I think there's more opportunity there as well when it comes to selling a company, because you have more capital to start something else and join forces with other people, you know. And if you look at PayPal Mafia, for example, they all had liquidity events and all sold, and then they went to start big other things like the YouTube and LinkedIn and Yelp, and they're all, you know, tapped in. So it begs the question, like, is there a smarter way of, all right, selling to start and then having the wherewithal to be, all right, this is my next move to create something that's bigger. And with that in mind, does it make sense to stay on, you know? Like if, let's say I'm Tyler, the creator, and I start my, you know, all future clothing line, sell that, and all right, boom, now I'm going to go to golf. All right, I have a lot more capital, so when I go to ASAP Rocky, I'm like, yo, I have all this money now. Let's pair up together and start another thing. You know, that's kind of where I see like another lane that a lot of us aren't talking about. And I'd love to get your guys' opinion. Is, you know, after exiting, does it make as much sense to stay on if the goal is to, you know, build something bigger? Because you want to have another opportunity to build something, you know, like I said, bigger, and use that money towards something else. Whereas if you sell and stay on, then you're on the board and consistently on that project. So it's harder for you to start something else. Yeah. What are you guys' thoughts?
I mean, I think that's the right way to look at it, right? I think it's like, I think we need to look at, to your point, Alex, like look at Black founders just like we look at the Elons and the Zuckerbergs and all these people, right? As talented individuals, right? Who are building their track record, and they're building their track record. They got to start with something. They start with that one thing, and they prove that they can execute. They prove that they can scale. They prove that they can return capital to their investors, whatever it might be, exit that business. And, you know, an exit can look like so many different things. Like you can exit a business, you know, sell it to a larger company and still retain some, you know, minority stake in it, right? It doesn't mean you're giving up full and complete ownership. You're giving up control, but you may still get, you know, residual income. You know what I mean? You may still benefit from being a minority shareholder in that company. So that's what I would hope every outcome would have some piece of that, right? Like, don't just give up everything, right? Because if a larger company sees value in it, it's like, okay, this business that I founded and grew to this point has so much more in it, right? So I want to have some part of that longer term success. And then, you know, just again, it's about talent. It's about the founders, the teams that they're able to pull together, and how they're able to to execute on a business model. And if they could do it there, it's like they could do it in a different business. So I want to bet on that founder when they move on to the next thing, is what an investor would say.
Yeah, in my way, when I look at it a couple ways. There is the age of the founder and how long they've been in the business. So let's say the owners of BT, when they sold BT at the time, right? They're like well into their 60s, 70s. Like at that time, we're like, oh, I don't really want to go and build another business at this time. It's like, I'm done. But then I also have an issue with this building to sell just so I can move on to my next thing, right? So when you're building to sell, I'm starting this brand right now. I'm working everything I can do to sell it. It kind of puts a blinder on you for areas of innovation to really grow the business and to really take it to a new level, because ultimately what you're doing is you're looking just to maximize the value of the organization just so you can have a really good multiple on it. But if you really think about, I'm building this business for the customer and the consumer at the end of it, and it's going to really help them make their lives easier, then you're really looking at it in a different way, because you're looking at, okay, how can I innovate on this product? How can we innovate on our processes and everything like that? So you're actually really in the business and you're living in the business to grow the business instead of looking to sell the business. So that's my mentality when I look at it. When I enter a business, even what we're doing right now, as much as I'd love an exit one day, it's like, I got to think of it. I got to think about it like, I don't even know if we're going to get an exit. So let's actually just build the company to be as valuable as possible to really serve as many people. And then we can have an exit. So my mentality is always, let me think about the customer first, the person who's actually using our services and everything. And then later on, there'll be an exit. So if I'm building it, I'm not just thinking, okay, at this number or at this, like, way we get here, because at that moment, there may be an opportunity. Hey, we can like really do this and it can grow to this, then this can happen, right? So it just, exiting to me, it's like, I've never experienced it. I never know how it'll be. But when I imagine it, it's accumulation of different things at the right time. It has to be at the right time emotionally. Like you have to be like ready to leave the business, right? And then you can venture out and do something else. Timing of it might be, hey, there's an opportunity in a different industry to do something else. Let me sell it and go do that. So my thing is all about timing. It's not about looking at the mentality of like build to sell, but just build to innovate and serve people. And the opportunity is going to open itself when the time is right to sell to the best person. That's my take.
Yeah,
that's why I think Tristan was right. Like building, having the goal to build the Black PNG was right, and that was the target. And then he was open to selling, not necessarily building to selling. So that's how I would look at it.
Yeah, exactly. I think that's like a big, like a small, minute thing that can make like a big difference. The building to innovate and then having the opportunity to sell versus strictly building to sell. Because he was definitely an innovation person when it came to it. He was specifically looking to change the way, those boxes that had the curly dudes on it, curly hair dudes on it. You know what I'm saying? Like, so yeah, I think that's a big, small thing. I was reading Atomic Habits, and there was a point in that really stuck out to me that he mentioned a flight from Florida to New York, if it's 5 degrees off, you end up in Washington, and it's small things like that in your mindset that can create a huge difference when it comes to how you're navigating yourself. But with that being said, man, I'd love to get into your journey and how you're navigating yourself, bro. Talk to me about like where you're from. Like, we need to introduce you to our audience. First off, when you were talking to us, you said you're from Philly. Talk to us, bro. Where are you from?
Yeah, man. Yeah, I'm from the Philly area. So I was actually born in Chester, Pennsylvania, right outside of Philly. My family's from Philly, from Chester, Sharon Hill, if anybody knows the area. And I grew up in this tri-state area of, Pennsylvania, South Jersey, and Delaware. So my whole life I've been here. Ended up going to high school in Delaware, little tiny state. Got my undergraduate degree in exercise science. Thought I wanted to be a physical therapist, and realized somewhat quickly I didn't really want to do that. I wasn't passionate about that career path, right? But knew that there was money to be made in that space, right? Physical therapists made great money. The school I went to, University of Delaware, at the time was number 2 for PT. It then became number 1, so it was like the right place to be, right? But after just shadowing in the clinic and all, like I knew I wanted to help people, right? I knew I wanted to help people improve their lives. But after just being hands-on with it, I realized, I don't like this, right? This is just not for me. So I ended up just discovering this like startup, like pitch competition program thing, and decided, you know what, let me, see what this is about, right? And ended up coming up with this fitness app called Goodfoot. And Goodfoot was going to help people get fit for a good cause. So you could challenge your friends to their fitness goals, and whoever achieved their goal first got money donated to a charity of their choice. That was the whole premise of the app. So like that was my first venture, right? And went through the whole thing of like finding a co-founder, right? I need technical talent because I can't code at all. And had one of my good friends join the team. We started building this thing out, started presenting the idea at pitch competitions, and remembered just bombing the first pitch competition I ever did. Like the judges were confused. They were like asking me, how are you going to make money? I'm like, oh, we didn't exactly think about that. We're just trying to build this cool thing, that we just want to see exist. So, in a way, sort of doing all the things that are wrong when it comes to entrepreneurship. But I remember just after that competition, I walked out of the building and I was just like, it's like, man, you know what? Next time I got this, right? Next time I got this. So I've just been like committed to just learning about entrepreneurship and diving deeper. And I'm a problem solver is what I really like to do. And I like to solve problems that help people improve their lives in a lot of different ways. And I didn't mention it, but I get this bug from my mom, who started a property cleanouts business when I was in elementary school. And literally every weekend we would just drive around in this rented U-Haul truck, and we would go to different houses to clean them up to be sold. Right. And that was a grind. That was absolutely a hustle. And it was not luxurious, but it was entrepreneurship. But my mom never called herself an entrepreneur, right? Like that language was just not in my vocabulary until I got to college. And I just learned, oh, it's about creating value for people. It's about solving problems, right? So anyway, from there, sort of worked on different ventures here and there. Kept just, throwing my hat into the ring, doing all the pitch competitions, and got better and better over time. I ended up actually pitching an idea to teach young men of color entrepreneurial skills. I did that at a pitch competition that I also somewhat bombed because I stayed up the whole night prior to it trying to perfect my pitch and memorize it, and change the script in the middle of the night. So that was not smart, and I ended up not going to sleep. So had no memory of anything that I wanted to say when I stepped on the stage. No energy, none of that, right? Nothing. Got on the stage and totally blanked. But got to a point where I was just speaking from passion about why I wanted to teach other people that look like me, right? People that look like us to be entrepreneurs, because you get this sense of self-worth, right? And giving back to your community and making a difference, and just trying to provide for your family, right? As I learned from my mom. And that landed me a scholarship to get a master's in entrepreneurship and design thinking. So ended up doing a 1-year program at University of Delaware doing that, and took it upon myself to travel across the country and just learn from other startup ecosystems, like what's going on in Silicon Valley, what's going on in Texas, in Miami, right? Like what are people doing right to support entrepreneurs and make sure they have resources. But more importantly for me, I was really interviewing Black and brown entrepreneurs and women entrepreneurs, trying to hear their stories. Like, what are your problems as entrepreneurs getting access to resources? And just time and time again, access to capital, people that believe in us, it's hard to come by. There's no infrastructure to help us launch our businesses and scale to the point where, we deem it to be successful. So that's what I've committed myself to, is just serving entrepreneurs and trying to help them get access to the things they need to succeed.
So you've been in doing like a lot of VC stuff. Like that's how we met, because when I was working at Clearco, I got introduced to you by Noah Sandler. And, he told me a lot of great things. You need to meet Garry Johnson. You need to meet Garry Johnson. He's in the VC space. And at Clearco, we're funding e-commerce entrepreneurs. What led you from going to like, actually, I'm going to be a VC? Because you start with the entrepreneurial bug, but then you just shifted towards actually becoming a VC and funding these business. And what was like your educational path towards becoming in venture capital and et cetera?
Yeah. I mean, it's really this like obsession with solving the real problem, right? Getting to the root of the problem. And eventually I started working on this fintech startup called NoCap, and NoCap was helping more traditional small businesses, like brick and mortar type businesses, get access to capital through like small business loans and things like that. And really focused on like minority businesses, right? Black and brown people looking for lending solutions. And it was a tech platform, right? Like I had automated a way for someone to go to this website, put in some information, and get various recommendations on like, here are the best places for you specifically to get funding for your business, right? So I became this person who just was building databases of resources for entrepreneurs, right? And not every entrepreneur would qualify for all the small business lending opportunities. So then it became, okay, what are like the pitch competitions? What are the grant opportunities, right? All of these things were things I was just building a database of. So, I'm always just collecting resources because I talk to so many founders, and somebody says, oh, I do this, I need this. I'm like, oh, I know what's right for you. And I can send them the right resource, right? So ended up shutting down the fintech startup because for myself, being an entrepreneur, I was not able to successfully raise the investment capital that I thought I needed, right? Had co-founder breakups and all that kind of stuff too, but, was very much a tech founder, doing the pitch circuit, getting good at pitch competitions, became very good at them, won various pitch competitions across the country, but was never able to get into an accelerator, right? Like I applied to Techstars, I applied to, Backstage Capital's accelerator, I applied to YC, like, all the big accelerators, and came close in some programs, but was never able to really, get to where I wanted it to go. So it came to a point where it was like, it's too much for me to keep running this startup, funding it myself, right? While being a broke recent college grad, living at home, trying to figure out how do I get out of here, right? So ended up shutting that down. But at the same time, I was always just helping founders. So I actually had started a nonprofit that just helped founders with education, teaching the basics of entrepreneurship, teaching them lean startup methodology, right? Like how do you maximize the limited resources you might have today to launching your startup and growing it to the point where investors might see value in it. So all of that it built, my knowledge base, it built my connections, and venture capital is an integral part of the tech startup world, because if we're talking about the most successful technology startups, they all raise venture capital to get to the point where they are today, where they have exits, right? They IPO on the stock market, or they sell to larger companies. So I learned a lot about VC, not being a VC, just trying to learn how VC works so I could help founders raise VC. So I got really good at helping other people raise more money than I could raise for my own startup. Interesting, but that's my skill set. So fast forwarding a bit, was just sort of studying people like Arlen Hamilton at Backstage Capital, a lot of like Black and brown people and women who are building non-traditional venture firms, right? Because when you look at the VC industry, like I don't want to spew all the facts that everybody probably already knows, but at this point it's less than 1% of venture capital funding goes to Black founders every year, right? So we know that there are plenty of founders out there, but VCs don't look like us, right? And they don't see value. Historically, they've not seen value in the type of companies that we've built. So there's a new generation of venture capitalists building their own funds, raising their own funds, and saying, hey, we're going to invest in people that look like us, people that come from our communities, because they see value where other people have failed to. So I learned from a lot of people like Arlen. I had won a pitch competition that she judged in Texas, and from that moment on, I knew I was just like in the right place. Mm-hmm. And one of the things that they did, that Backstage Capital did, that was truly, I think revolutionary, is, they raised a venture capital fund from institutional investors and wealthy individuals, right? And they, the job of a VC is to take that money and invest it into early stage startups that can create sizable returns that create generational wealth for investors, right? But everyday people, regular people, don't get to participate in that, right? To invest in a VC firm, historically, you had to be wealthy already. You have to be an institution, right? And that means you had to have had maybe some kind of exit with a previous company, right? You couldn't invest in a VC firm unless you had sold Miel, right? Miel, maybe the founders of Miel couldn't invest in a VC firm until today. But anyway, what Backstage Capital did is they leveraged this new-ish legislation in the U.S. that was passed during the Obama administration that allowed for private businesses to raise capital from the public, right? Up until 2015, 2016, that was just not possible. So what Backstage Capital did was they leveraged the laws so that everyday people could invest in a crowdfunding campaign that funded Backstage Capital's operating company. And Backstage Capital would then not take the money that the crowdfunding investors put in. They would take the money that institutional investors, wealthy people, put in, and they would invest that money. And when Backstage Capital makes money off of investments, the everyday people that invested in the firm can benefit as well. So they sort of like hack the system, right? So that's the type of stuff that I'm like studying, I'm learning from. Yeah. And I'm like, that's dope. And I had gotten this was like, I guess it was 2020. I gotten a stimulus check in 2020 because the economy was it was down bad. It was down real, real bad, as you all know. But I remember getting the stimulus check and I was like, you know what? Like, I'm making a bet. Like, this is a founder who I believe in, who I've been studying, who has believed in me. And I took my check and invested it in Backstage Capital's crowdfunding campaign, right? And that was my first private investment, right? Not a stock that's on the public stock market, but in a privately held company. That's what got me into the VC space. And from there, I was like, how do we do this ourselves? So after doing that, it was 2021. I decided to go back to school, get my MBA at Howard. So I'm still getting my MBA. I'll graduate next spring, God willing. And I founded Bison Venture Partners with my classmates, because at our orientation, right, we all were in person on campus. Like, Howard's campus it truly is a magical place. Like, the energy on Howard is just unreal because of the legacy, the history that exists from there, the Black excellence that has been produced at Howard. Like, it just flows through the campus. So we're on campus. We're like, yo, we could wait until we graduate to, start something up, or wait until we graduate to, get some high paying job and then try to do something 10 years from now when we're all well off and blah, blah, blah. Or we could do something right now. We could put our collective talents to use right now, right? Found a company together that's built on community, that's built on, like, we don't see the infrastructure today that allows for everyday people in our communities, people who, work at McDonald's, people that work at, Wendy's, people that clean the campus, right? They are not able to invest in technology startups because of their net worth, right? And that's not right. But what if we created a way for everyday people to gain access to these same opportunities, to invest in local small businesses, invest in scalable tech startups? And we, taken bits and pieces of different places like Backstage, like Founder Jam, and said, you know what, we can help our community, right? If they're entrepreneurs, if they have their own business, we can lend our expertise as consultants, come in, help them get investment ready. And then we can help them figure out what investment platform might be right for them, because everybody's looking for access to capital, but no one's really being educated on how you raise funding from your community. So that can be our niche, right? So that's sort of the model that we've been leaning into. And after we started doing that, right, it's like, we can find entrepreneurs. Like, anytime you tell an entrepreneur, oh, we help people get access to funding, like, everybody's like, oh, I need your help, right? Everybody jumps on it. But then we wanted to, like, practice what we were preaching. And we're like, yo, what if we raised from the community too? Right. So we launched our own equity crowdfunding campaign, and we raised on WeFunder just to raise our startup funds. Right. Like, before that, it was really just us sitting around, like, talking about this as an idea. But we said, let's launch this idea to the community through an investment campaign. And let's say, hey, we want everybody involved in this, if they're interested, literally from the ground floor. So it took us several months, but we raised a little bit over $50,000 from 164 individuals. Right? All people who, for the most part, like, the vast majority of our investors had never invested in a privately held business before. So we realized we're onto something there, where it's like, there are people in our community who want to invest in the companies coming out of their communities, but they just don't know how. Right? They have money to do it. They just don't know how to do it. They don't know it's possible. So now we see one of the ways that we add value to the community, again, is just, we can find entrepreneurs, help them get set up on campaigns, but then we also educate our community on what it means to be investors, how to do your own due diligence, how to look for deals, how to build your own investment thesis and your own portfolio that hopefully contributes to your own personal and generational wealth.
And I know you've been doing other things within the VC. There's, like, talk to us about First Founders, Ghetto VC, because you went straight to Bison Ventures, but I know these other things were things that you were doing before Bison. So what is First Founders, and then what is Ghetto VC?
Got you. Yeah, man. I mean, I'm a serial entrepreneur, so I can't help but to work on different things, multiple things at once. First Founders is the nonprofit that I mentioned. So it's a 501c3 nonprofit, so all donations are tax deductible. But, you know, started that while I was a tech founder, while I was out, you know, trying to raise money for my own startup, trying to just create a solution for, you know, potential customers. Again, I was facing issues and I knew other people were facing those same issues. So I was trying to get into accelerators and failing at it. And at the same time, taking those lessons and being like, let's start our own accelerator. So, you know, launched the first Founders Accelerator in Delaware, got some funding from our county government to do it, and created our own 12-week program. Like, we're going to teach local founders how to build a scalable tech startup, and no one else was doing that. No one else was focusing on, you know, underrepresented people in the community. No one else was taking the same like curriculum that a YC or a Techstars might use and providing that in our community. So like, we did that. We launched that in 2019. 8 founders were in the first cohort, and since then we've helped over 300 founders, you know, from all around the world, raise over $500,000 in non-dilutive funding. So through pitch competitions, through partnerships, like we help founders get access to resources, primarily capital, that they need to start up and grow without having to give up equity at the very beginning. So that's what First Founders is. We got a whole, if you visit firstfounders.org, there's a database on there with a bunch of just startup resources. We have a pitch competition we're sort of co-organizing. It's called Startup 302, and applications are open right now. So I'll make sure you guys get the link. But we give a lot of money away in that competition every year. So
you're like Jay-Z when he got shut down by like all these record labels, and then Dame and him start their own thing. They're like, all right, you're not gonna take my emails, my meetings and everything. I'm gonna go start my own thing, and I'm gonna like teach other entrepreneurs how to do it. So you just took matters in your own hands.
That's spot on. So
that's the best way to put it.
I can't stop. Like the failures have contributed to my success, right? And I think everybody should look at failures as that. Jay has a line: loss ain't a loss, it's a lesson. Right? And I just see my purpose to share these lessons with other people, because what am I going to do, you know what I mean, with this knowledge? If I clearly have proven to myself that I'm much better at helping other entrepreneurs scale and build partnerships and get resources, why wouldn't I lean into that? So 100%. The Ghetto VC is actually under Bison Venture Partners. It's a publication that I personally write, but it's a guide to help people understand how to invest like a venture capitalist, even if you have limited resources. And I'm having some fun with that. Actually just launched it last month. But, you know, the Ghetto VC is this mindset where I just try to help people like do what I've been doing, which is just, you know, wherever you're at, whatever resources you have today, even if you have $10 in your bank account, like there's something you can do to get that idea out of your head and make progress on it, right? And the Ghetto VC more specifically is around just, okay, you have $10 to invest, right? Instead of thinking, oh, I need to save, you know, $1,000 or $10,000 before I start investing. It's like, no, let me figure out where can I put this $10 right now? Even if I just get started with Stash App or Acorns or whatever it is, let me get started by building that mindset now, and then grow to a point where, you know, you build that muscle. And now you start realizing, oh, you know what, instead of those Jordans, right, let me invest this $100 into a startup on WeFunder or Republic. And, you know, so that's what I just try to break down there, because it's so easy to invest in startups today, right? Like I said, like this, it used to be reserved for wealthy individuals and people who went to Ivy League schools, but it is truly being democratized now, where just anybody, if you got $10, you can get started. So that's what the Ghetto VC is. And it has its own little vibe to it. In part, it's kind of like social commentary, because I look outside my window and, you know, my neighborhood is being gentrified, right? Like literally my neighbors are being displaced as we speak. And that inspired me to just be like, what if we had ownership in our community, right? What if we weren't, you know, withholding to, you know, landlords and you know, universities that are expanding, taking up space, taking up buildings, right? What if we own those buildings? What if small businesses in our communities could afford to be there, and all that kind of good stuff?
Yeah, most definitely. Speaking about that $2,000 investment, how did that turn out for you? Was it like a good investment? Did you see anything on that?
Yeah. So I love telling this story because the financial return is not what I expected. The 1,000 I put in, the specific 1,000 that I put in, has not yet materialized, right? It's a long-term bet. when you're investing in startups, especially if you're invested in a venture capital firm, VC investing is a 10-year game, right? That you're not expecting to get anything in return for 10 years. But my story is a bit unique, where I invested some money into the Backstage campaign. And then what Arlen did is, she's always been someone to share her knowledge and expertise. She launched almost like a course. She launched like an online course called Investing as a Catalyst. And I believe I either had to apply, or maybe I could have just paid for that one. But I paid to join that one. I was like, all right, here's more money. Take my money, because I just want to learn everything from you, right? And she was just going to teach anybody who was interested how to invest like a VC. So I took the course, loved it. Then after graduating from the course, she announced a brand new apprenticeship program that Backstage Capital was going to do, where a select group of people who went through the Investing as a Catalyst course could get the opportunity to work alongside the Backstage team, right? Their investment team, review deals, interview founders, and determine who would get an investment at the end of the day. So I was like, I'm jumping on that, right? And, one thing I didn't mention is, I didn't go to any like fancy schools. So I was not breaking into VC, through applying to VC jobs. Like nobody was going to give me a VC job. I couldn't even get like a regular job, in all honesty. But here was an opportunity to truly break into VC with someone who was disrupting the whole industry. So I applied to be an apprentice, got accepted, and for a few months was with the team reviewing deals, high quality deals, right? Like startups all across the country, even around the world, disrupting different industries. And I got to learn what it really means to review deals, do your own due diligence, and determine what investment could potentially, create $1 billion exit, and to be able to learn that directly from her team, again, was something that I took and was like, more people need to know this stuff. So again, BVP, the Ghetto VC, like all these different things I'm doing, is just my way of sharing what I've learned through breaking into VC in my own way. So the return, and I didn't finish. I'm sorry. I got to tell you this part. Here's the kicker. Sometimes I forget. The apprenticeship was a volunteer opportunity, right? We were not told we were going to get paid or anything like that. I didn't need to get paid. I'm like, yeah, I want to learn from you. Mm-hmm. So about halfway through the program, she tells us, oh, you know what? We can pay you, maybe it was $2,500, whatever it was.
A little stipend.
Yeah, a little stipend to compensate you for your time. I'm like, oh, bet. Like, yeah, I'll take that. Wasn't expecting it, but I'll take it. And then the offer changed, and it was like, you know what? You can still take the check if you'd like the check, or I can pay you in equity in the firm. Yes. And the equity is worth many multiples more than the cash payout would be. Needless to say, I took the equity, so I'm up, right? That $1,000 investment has exponentially grown in a way that like I couldn't have expected it, right? So
and was the equity in, like, she's like, all right, I'm gonna take your 2,000 and put it in equity. And, I'm just trying to figure out like what value is the firm at that point for you to believe like it's in the multiples, because she can be like, okay, Backstage Capital, we're like, let's say $200,000 firm, 2,500, decent equity you'll get there. Because if you're betting with someone like Arlen Hamilton, especially, like she's a trailblazer, you're for sure gonna eat in like 10, 15 years, right? Or was the valuation of the firm like in the millions at this point, where she's like, the 2,500, it's like a little small piece and you're still gonna eat, but it might not be as like when if it was like in the 6-figure digits. What was it?
Yeah, I don't want to get into specifics of the
sure.
numbers.
Yeah,
but yes, there was a sort of valuation at that point in time, right? And that was a year ago now. So of course, like the market has changed and things like that. But even regardless of where the market was then, Backstage Capital is a venture capital firm that's invested in now over 200 startups, right? So they've built a very diversified portfolio, right? And they need really a small number of those startups to succeed to be able to return the fund. And if those startups succeed, hopefully when those startups succeed, the value of the equity will be something I'm imagining I wouldn't have even been able to fathom at the time, right? So it's not even something I'm thinking about, but for the valuation where the company was at the time, right, with the assets under management, I think at that time, assets under management, like they've raised, over $30 million, right? At that point, they raised over $30 million. So you got to think about assets under management, but then you also have to just think about what investments has the company already made. So I factored all those things in, and really, due to the founder, like you said, due to the company, due to my relationship, it was really like a no-brainer. So
No brainer. Yeah. It's like, so what is it, like 1 out of 10 companies that get VC funding end up blowing up? So was like, so you need at least like, let's say 15 to 20 companies pretty much to succeed out of those like 200 to
That's-
really.
That's so the VC model is, yeah, if you're investing in 10 startups a year, you're expecting the majority of them to fail because most startups fail. But VC, as it exists, they're making the bet that yes, one or two of these startups is going to make up for all the losses in a way that you're not even going to think about the losses because this one startup, made so much money.
Let's talk about. Sorry, go ahead. Let me not interrupt you. Go ahead.
No, but I mean that's really it. So with Backstage, it's complex because the firm was making individual investments into startups. It also had an accelerator, right? So the terms for each deal look different. Not every startup gets follow-on investments. So, the ownership stake in different companies looks different. So, yeah, you need, realistically, I mean, I want the majority of companies in Backstage's portfolio to succeed. But just when you study VC, it's like, yeah, a minority of them will. So it's kind of hard to put a number on them because I would also have to know, I would have to know how much Backstage was investing in various deals because some startups may have received $100,000 investment. Another may have only gotten $25,000, right? So you got to factor all those things in too.
So let's talk about when a company fails. Just like you're saying, most companies do fail. What is the process of a VC firm when a company is written down as this company is failing? What happens then?
Well, yeah, I guess it depends. But if a company is failing, I wouldn't say a company is failing. I guess it would just really get to a point where the company has failed, right? It is clear that this company is not going to create venture scale returns for the investor, and they're most likely losing money on this investment. But if a company is failing, depending on the stage, there are different things that might happen. So if it's a truly early stage company, it's really just being written off, right? There are no assets to be returned, right? The company's just going out of business. They run out of money and they really don't have any assets themselves. But if it's a more developed company, failing may mean that there's still some kind of liquidation that happens and assets can be returned to the fund. So the fund or the firm still lost money on their investment, but they got something back. Right. So it just kind of depends on how far along the company is. But a firm like Backstage Capital, they're investing in early stage companies, pre-seed to seed stage. Whereas venture capital firms with more assets under management, right, like hundreds of millions of dollars under management, they're investing in, Series A all the way through, you can get to Series D, you can go further than that. But, well-established companies that have invested in infrastructure and they have, maybe huge amounts of their labor force and office space and all that kind of stuff. And then, things can be liquidated to create some kind of return.
Yeah. I appreciate that clarity. This for the audience that's curious. Some of the companies that Backstage Capital has invested, and we can get off Backstage Capital after this. Of course, we mentioned Fleeting with Pierre Leguier, Kira Health, Credit Rich, Career Karma is a big one. Another big one I'd say is Dollar Ride. That's a huge one. Upsy, creating calls in prisons.
Yep.
So just to name a few.
So many.
But
Yeah.
let's go ahead, Owen.
Oh, I was going to ask, before we move away from Backstage, I want to ask you one thing, because Arlen is such a, she's different from the typical VC, right? Some people see her as a maverick within the industry. How's it been working with her and being under her tutelage?
I've loved it.
Yeah.
I've loved it. And I think, Arlen is definitely a trailblazer, and that is not easy, right? In this space, in any space, being a Black founder in general, you have to develop thick skin, right? And I think especially in the VC space, there quite literally are it's a handful of Black women, queer women, right, trying to do this thing. So nothing that she's done is traditional. I know not everybody may agree with her tactics and strategies, but that's Arlen. She has a distinct character and way of doing things, and that has gotten her to the point where she is today. I'm grateful for her because she was one of the first people to, believe in me. I was presenting on a stage where it was just an idea, and she then got up on that stage and said, the winner is him, and there wasn't even like a real prize. The prize for me was just, wow, Arlen said I'm a winner.
You're a winner. Yeah.
All I needed to hear, like, it was go mode.
You're certified,
like
bro.
for real, go mode. So, you know, I'm an Arlen stan. Like I love her to death, and just grateful for everything she's created, because it really is a blueprint, right? And she's not afraid to share this knowledge with other people so that they can do it themselves. So, you know, being an apprentice of hers was just an honor, and I was able to take that and, you know, start building on that through Bison Venture Partners.
Shout out to Arlen. We'd love to have her on the show.
Yeah, I'm sure you can make it happen.
Yo, you know, we'll try. We'll see what happens. We'll see what happens.
Drop my name. You know, drop my name.
Most
We
definitely.
had Garry Johnson on the podcast. You want to come on?
Yeah, share it.
That's a fact. That's a fact. Awesome, yo. So, you know, working with so many founders, I'm guessing you can see consistent threads that, you know, people are doing, maybe not wrong, but consistent lessons that you see, right? Could you share some of those lessons that you consistently see with founders that are starting up?
Yeah. I think Owen kind of, you know, touched on it, but, you know, you gotta create value for people. You have to identify a problem. You have to interview customers. You have to understand what they need, what they want, right? Like, what are their unmet needs, and then build your solution from there. A lot of founders suffer from, you know, the founder dilemma, the innovator's dilemma of, you know, you just create something and expect for people to flock to you because you created this thing. You put your baby out into the world. But what you'll learn very quickly is that people will tell you very quickly that your baby is ugly, right? And you want to avoid that by all costs. So, you know, that comes from just listening to people. And that's why I like do various things, because there's no shortage of problems that exist in the world. Like, a true entrepreneur knows that, like, if you just open your eyes, like, you can find a problem. Like, there are problems in front of you every day. People complain about things every day. You experience things every day that could be improved, that maybe are not being solved at all. And all it takes is for someone just to say, you know what, here's a problem. Let me try to do something about it. So I think the best founders, you know, find a problem, they dive deep into it, they listen to what people truly need as a solution, and then they build their solution with their potential customers. And I think building with your customers is a great strategy, because, you know, it allows you to, one, convert this person who was just, you know, a problem owner into a paying customer, right? Because you've built like a custom solution for them. But then it becomes like this lifelong relationship, and they become an early evangelist for your company, where now, like, you know, these people who you designed the product for in the beginning are now helping you spread the word to other people just like them who have that same problem.
Gems.
I didn't mention
Most
it, but
definitely,
I teach entrepreneurshor at University of Delaware now. I'm actually an adjunct
Man,
professor.
Wow.
Gary, how much
That was-
time do you
just
have,
want-
bro? Like, you're out here launching VCs, you're teaching, you're doing an MBA. I mean, my goodness, like,
Yeah.
credit to you.
Hey, I thank you. Yeah, I stay busy. But it's what I'm passionate about, right? So it's not, I shouldn't say it's not difficult. It's definitely difficult at times, but when you're passionate about something, when you realize, again, you create value for people, it's hard to give that up. So, you know, I'm getting my MBA because I want to become an even better, you know, entrepreneur, better investor. Would love to teach at an HBCU in the future. Being a business professor, entrepreneurship professor at a HBCU is, like, you know, definitely one of my goals. But I just take a lot of pride in teaching and get fulfillment out of just helping people in that way, and just like sparking something into a young entrepreneur where they're like, oh, I have this idea, I don't know. And then you're that person who's like, I think you can do it. I know you can do it. Here's how you might, you know, get started, and you see where they go. And again, just things build on each other. So, you know, my whole thing is like, I work with entrepreneurs from truly the earliest stages where it's just an idea. They just need help finding the right resources. Cool. But then certain entrepreneurs, they go and they scale up and they need connections to VCs, or they want to raise from the community, whatever it might be. Like, I just have different ways to help these entrepreneurs, you know, regardless of where they're at. So that's where I like to be.
All right. So I love how that sounds, but my brain just went completely left. You know, with people coming to you and asking you about your opinion on their business, I know there's some duds in there. I know there's some hoots. What was Lawrence's app from Insecure? Was it hoot or tweet? What was it called?
You know, he worked on that business plan for like ages, though. Let's
For
start
like
there.
7 years.
I'm working on my business plan.
Actually, I
So-
never watched Insecure. I know who Lawrence is, but it sounds like he was based off of some real people.
Oh,
He
most
actually ended up being a
definitely.
VC too in the show, right?
Yeah, actually.
Okay. All right. So that makes sense too, because, unfortunately, in the VC space, like there are plenty of people who have no entrepreneurial success who are able to get into a position to make bets on determining what entrepreneurs get funding and could be successful, right? It's definitely a broken system. It's just not a system that was designed for any of us to truly succeed. But yes, there are plenty of, just because you're a VC does not mean you know what an entrepreneur should do to succeed with their business.
Yeah, I'm dying. So Lawrence actually made a LinkedIn profile, like the actor made a LinkedIn profile.
What's his real name? Jay Ellis?
Jay Ellis, yeah. He actually made a LinkedIn profile real quick called, let me share my screen and show y'all real quick. There you go right there. Lawrence Walker, makeshift mobile application engineer at Woot Woot.
He even got the Best Buy shirt.
Yeah, the Best Buy shirt. That's hilarious.
Man.
Awesome, man. All right, let's get off of that commercial break. You were saying that a lot of the people that are actually VCs don't have any entrepreneurial experience at all. That's news to me. I've never heard about that. So the people just be like, yeah, I just want to go into VCs and make that decision and don't have to have any experience. How do VCs make money overall though? Like if they're investing in 10-year horizons, like how are they making money in the short term?
Yeah.
Or is it all based off the 10-year horizon? So whoever had money first is just that 10-year already hit, and now they're just basing off of that 10-year horizon, is continuing on and on and on.
Yeah. So it's a great question. I'll start with the, how do people get into that position? And it's very similar to starting a startup and trying to raise funding from investors, right? You start this thing, you have a vision on where it can go, and you find people with money to make a bet on you. And they're making a bet on you because, maybe they want you to build a better world. They want, you to create value for customers, blah, blah, blah. But they want a return on their investment. So there are investors who want to make bets on startups, but don't want to do the work of investing in every individual deal. Right? They want to invest their money with a professional who can, take this money, and they're investing in this particular professional because they believe in the thesis, the focus area that this VC has decided to focus on, right? And the VC makes money in primarily two ways. So VC is taking that money from investors and they're pooling it into a fund, right? They're raising money most likely from multiple investors and pooling it into a fund. So let's say they raise, $10 million total. And they say, all right, we're going to invest this $10 million into 10 different startups over the next 10 years. And the types of startups we're going to look for fit into these categories, right? Their thesis covers the categories, whether it's fintech, financial technology, health tech, healthcare, health technology, CPG brands, consumer packaged goods, robotics, whatever it might be. The VC says these are the type of companies we're going to look for. And there's what's called a management fee. So just for managing their investors' money, just for managing that $10 million, the VC is going to take 2% of the assets under management to operate their VC firm. In addition to that, the VC is going to receive typically 20% of what's called carried interest on their deals. So like I said, they have this $10 million, they're going to invest it in 10 different startups, and they're assuming that a small number of those startups, let's say 2 of those startups, are going to go on to become very successful. When those companies are successful, they create some kind of financial return. Let's say it's $100 million, right? The company sells for $100 million. The VC firm gets 20% carried interest in each deal. So 20% of the returns are going to go to the VC firm, and then 80% of the returns are going to go to the investors whose money they're managing. So in the short term, the VC is getting the 2% just to operate their shop, right? To go out, do their job, find startups, go to pitch competitions, interview founders, whatever it is. And then in the long term, 10 years from now, they're saying, okay, we're going to find some big wins, and we're going to get, 20% of those big wins. But their primary job is to return capital to their investors, right? VCs are working for other people. They're managing other people's money. So they're trying to find the best deals that give them the best returns so that not only can they prove to their investors, like, look, we know how to find startups, right? But also they want to make money themselves. So they have this like vested interest to work to the best of their abilities.
I know, like, when you're raising money with an angel, it's a lot shorter. It can be like, let's say month one, let's say January, you might get funding in April or May. Typically, how long does it take to actually close a deal with a VC firm?
It depends. It depends I think angels and VCs alike, but yeah, angel investors are just individuals, right? They've got money in the bank, or they can pull it from whatever portfolio, whatever it might be, and make an investment when they want. A VC is more complex because, for one, they're not actually sitting on that $10 million. They don't just have 10 million in the bank ready to go at any point. They actually have to do capital calls, right? And sort of do this thing where basically you pull money from your investor's bank account. You tell them, all right, this lump sum of money is due this quarter so that we can make our next batch of investments, right? So the VCs have to have time to be able to do that. Time horizon, it could be, 3 to 6 months from, when you get your first meeting with a VC to when they actually wire money to you. And, you got to think about the whole process. So it's like, first, you're going to have a meeting where you pitch them, right? And you just go through your presentation deck. Then maybe you have a follow-up meeting if they like you and they want to invite more members of their team, right? And everybody gets the full pitch, and it's a longer pitch, and you're diving deeper into different spaces. Then they may say, okay, we're interested in investing, but we need to do some due diligence. Due diligence is just the research that you do. So the investors want to go, they want to talk to the customers you said you have, right? If you said you're selling to Target, right, or to Walmart, whatever it is, they want to talk to, the buyers at these different places. Like, is this information true? How are they as a company, right? Do they have their paperwork? Do they have insurance? All these different things. So they're going to do all that stuff. They're going to send you a term sheet with the investment terms, right? Like, how much are we valuing your company at? How much equity do we want in exchange for a certain amount of money? And then you have to wait for all parties to sign. And then from there, you should get a wire transfer with a lump sum of money. But typically that takes several months.
As you're explaining all this stuff, I can imagine, like, as an entrepreneur, you've worked so hard to build this business, and then now there's like all these venture firms who you have to report to. So it's like this idea of entrepreneurship, you're escaping for freedom. But then at the end of the day, it's like you as a CEO, as a chairman, it's like you are answering, and it seems like a job because there's board meetings, there's quarterly calls and earnings and whatever, right? And it just seems like you've just hired yourself to do a gig and not just doing it to really build a business and actually escape the rat race and have your own thing. And that's one of the things about entrepreneurship we don't talk about, right? Is the more you grow, the more successful you become, the more your job and your organization becomes your actual job. It's like, you're not just going to make a lot of money and just have freedom. It's like, hey, you got to be here. You got people to answer to, not only your customers, but now you have bosses too, who demand you to conduct this company the best way possible, or else they're going to replace you. And we've seen legends like Steve Jobs get replaced. And I mean, other entrepreneurs, I can't name the top of my hand, but that's the most famous one everybody knows about.
That's a big fact. I was listening to Morgan DeBon on her podcast. Shout out to Morgan. She'll be on the podcast one day for sure.
Speak to existence, Al.
Most definitely. She will be on the podcast before 2024 ends. And she mentioned something that was really interesting to me, is that in the meeting with her chairman, is that how you say it? With her chairman? Anyways, she is in the meeting with the chairman, and she actually has to leave the office or leave the room as they talk about her and how she's running the company all together. And just like, this basically, borderline feel gossip about how she's doing, and if they decide that she's not doing good, there's, steps that they're going to take from that point forward, and then they're going to come in and be like, hey, you're not doing this good. You're not doing that good. You got to fix these things up, That's something we never talk about as entrepreneurs as well, like having, a team of people around you that could influence how your business goes. And that could also be a good thing as well. Let's talk about that part, because it's very important to have people that are experienced that can tell you when you're doing good and when you need to pivot in certain directions as well. So it's like a double-sided coin.
And on that too, it's like we have to decide what kind of entrepreneurs we want to be. Do you want to be a lifestyle entrepreneur? Do you want to be a hobby entrepreneur? Or like I'm gonna launch a serial entrepreneur, or am I gonna be a VC raising type of entrepreneur who wants to like live that type of life? Because I think we see these dreams of these people on these tech magazines and everything like that, but it comes with a lot of stress, and it's not the stress that we all want. I think the stress that we can deal with is we just want to make money so we don't have to be sitting down doing something. We want to work maybe in Bali and work remotely and build digital products, and that's great too. There's no manual that says this is the only way to achieve entrepreneurial success. Entrepreneurial success can come in so many sizes, and I've had to learn this too, because there's dreams you have, but then you really got to hone it down and say, what do I really want? And Alex and I've had this conversation, but I'll tell you, Gary, it just came from like, I just want respect from my peers in the space, from my contemporaries, right? We have this idea of fame and fortune and everything. You do want the fortune, but the fame is kind of unnecessary. Yes, you'll have like people knowing you, but you just want to be comfortable, make good money, travel, enjoy the things you want to travel with, and just build a great business. And that's just what it came down to. And it was really a big turning point in my life. Like once I really understood this is the type of guy I want to be, and this is the type of business I want to create. I want to build a very, very successful business, a great business, and make money. And like, I'm okay if you don't know me, because the things that really matter to me is like family, sports, and just like hanging out and just having a good time partying. You know what I'm saying? If you give me those three, I'll be so cool.
One of my favorite sayings that I heard, I was doing a hackathon on a bus. The bus was traveling from Harlem to New Orleans, and we had to come up with a startup idea, build a team, build a startup on a bus, right? So very stressful, very chaotic, but loved it, met a lot of great people. And one of the mentors on the bus said, he shared this saying, he said, winning is defined by the victory conditions, right? Winning is defined by the victory conditions. And that put things into perspective for me, because that's what entrepreneurship is all about. You decide what success looks like for you. And by no measure is raising venture capital, right, the peak of success, right? Like you already said, like it comes with its own problems and additional rules and regulations and all these things. So you may be totally fine, starting up your own, maybe you open a barbershop in your community, right? And that's success for you. That there's nothing wrong with that, right? Like happiness, like if that's what brings you joy, if that brings you fulfillment in life, lean fully into that, right? So, before I forget, one of the things about, if you do raise VC is you do give up control. You do give up equity and ownership in your business. And to your point about those board meetings, it's not a bad thing to give up equity, because you're hopefully bringing in people who have insights and expertise that's greater than yours in areas that you just, never operated in. And they can lend that to the company to help it grow to the point where it can bring you the success that you're looking for. Without that type of infrastructure, without people in place to have checks and balances to say, is this the right CEO to run the company? Is this CEO operating, not only effectively, but, with morals, right? You get companies like FTX, right? Which had no board, right? Like with great power comes great responsibility. And that's why the boards exist. So, it is a balance, right? You got to be careful. You want to make sure you bring on the right investors for you. You want to make sure that these are real relationships and people aren't just going to kick you out because they don't like you, right? Or they want to replace you with, their preferred person, but it's people who are truly looking out for your best interests. And, whatever your vision was when you started the company, you want them to respect that, right? Like Owen said, it's about respect. And for me, it's about freedom. So freedom by any means. And, I can die happily, never raising $1 of venture capital money. I don't want it. I'm not about that life. But if I'm able to, build businesses that allow me to just live comfortably and provide for my family and uplift other people, like I'm living my best life.
Man, 100%, man.
Yeah, I completely agree. It's funny. I'd love to get your opinion on some of the businesses that are doing exactly what we're saying. Like, because we talk about the people who are raising venture capital and stuff, but there's people who are out there raising no money and have great lives. You know, like there's one company I was just talking to our past guest, and he has a podcast person that reaches out to podcasts like ours to get them on the show, and they get paid to do that. That's all they do. Is just reach out to podcasts and say, hey, do you want to get this person on? And she gets paid like probably M's off of that. That's her job. And she travels around the world, lives off her laptop, no house, no nothing, and just has that and just travels. That's her job. That's her gig, and she's making a killing off of that. And I was like, damn, you know, there's a lot of opportunities like that in there that we kind of just don't consider because it's not in our purview. It's not in our, in our ecosystem that we need to start bringing in. What are some of the businesses that you noticed have that potential that we haven't heard about, if you know any?
That you haven't heard about? I don't know. I think every business has potential, right? It's like it comes down to the team behind it, right? Are they open to truly ensuring that they're solving a real problem? Is the problem big enough, right? Is there opportunity for growth? So there's hundreds of founders. I work with founders literally day in and day out. I can talk about a whole bunch of them. There's one that just came to mind. It's based here in Philly, Black and Mobile. They are the first Black-owned food delivery platform. And these guys are just like, I mean, they're younger than me, and I'm 28. And they started, I want to say around 2017, 2018. And I met the founder sitting at this conference, this tiny little conference, just learning about like Black business here in Philly. And we both like been working like in the same like space, same geography, right? But following our own paths, and we've both been just like growing. And with them, I'm like, these guys are like the hardest working entrepreneurs I've ever met, because they started this food delivery platform by hustling, right? Like by first, one of the brothers, like they're twins, one of the brothers, he actually got fired from one of the existing platforms. I forget which one it was, but he was, delivering food for another platform and learned the ins and outs, right? And then decided, you know what? None of these platforms are focusing on Black-owned restaurants, right? And especially in a place like Philadelphia, right? Like we got some great food, right? Black people know how to cook. And the discovery of Black-owned restaurants on delivery platforms is not great. So they decided to do something about it. Started hustling, generated like a bunch of revenue, especially during the pandemic, just killing the game. I don't know if you guys have seen the Jay-Z Entrepreneur music video, Jay-Z and Pharrell, for the song Entrepreneur.
Come on now. We're Jay-Z stands over here.
Yeah, okay, word. All right, I'm in good company.
For sure.
So Black and Mobile, so those guys are in the video, right? They're one of the companies that was featured in that video.
Wow.
And
That's
like
dope.
for me, like I'm getting goosebumps thinking about it, because I'm like, I was just sitting in a conference, next to them, just chopping it up, like light talk, you know what I mean? Oh, what do you do? And we're both like trying to figure things out, but we're like, yeah, we're about our community. We want to do X, Y, Z. And to see founders like that take it from just an idea to that point, right? I'm like, yo, like they got so much more higher to go. So that's a team that I work very closely with. And there are a bunch of others I can talk about too, but Black and Mobile, check them out.
Man, I wish I had known about them when we were in Philly. We were actually just in Philly last year. What was it? October, November?
It's October.
October we were there for our conference, for our podcast conference. And yeah, we had no idea. We were eating some white people food, and it was not the best. We didn't know.
Cheesesteaks?
The Philly cheesesteaks was okay. The cheesesteaks were pretty good. Actually, no, they were good. They were good.
That was our
Where did
first
we
time
get
having chili feast sticks.
Where did we get them from? Do you remember? I remember we shot.
It was like, it was downtown for sure. Like the downtown core area is like, like the city. Man, I just
right.
look
So
like
you
I
don't
just
know
look
you-
at the camera.
The secret is basically, all of the like touristy spots, all the places that are like the big names that you could think about, like those are not the places to go. Like the best cheesesteaks are always, from like a corner store or somewhere random, even on like the outskirts of the city. So I was just curious if it was like Geno's or Pat's or something like that. But
I think it was one of those.
Well, what's up with it, Philly with cheese, man? Like, do you guys like have like cheese farms or something? Like,
I don't know.
Gorgonzola, fetas, because even like I see the Philly cream cheese, the one they sell.
So funny enough, that is not from Philadelphia. It's just they named it Philadelphia. I'm not even sure where it's from, but it's not ours.
Yeah, it's gonna be like, why Philly's guys so obsessed with cheese, bro? Like, honestly. Okay.
What gets me when I was in Philly was how small y'all streets are.
Oh my God.
Y'all
I cannot.
streets are so. Listen, listen.
So
I don't have
small.
beef. I have beef with Philly streets. You know what I'm saying?
But we, like, our boy was driving, and like, I personally avoided driving at all costs just because I'm like,
Yo.
I'm not dealing with this stress of Philadelphia
Listen,
roads,
man,
man.
I avoid driving. I'm like, I'm not built for this, and I'm from here. But yeah, the streets are very narrow. And do you know what part of the city you were in? Were you in like North Philly, West Philly?
I think we were in North Philly, if I'm not mistaken, but we're pretty close to the downtown core. You know, we weren't too far off from it, but yeah, it was insane. Where we are was being gentrified. We got like a Airbnb out there. Man, I wish I could tell you. Maybe I can look it up as we're talking.
Yo,
But,
like, this place, Gary, was like so
yeah, let's
beat
talk
down.
about that. It was-
So
Yo.
so we get to Philly, right? And we're driving in the neighborhood, and I think, yeah, Alex is at the front, and he's reading the navigation. It's like, okay, turn left here, turn right, whatever. And we're following this thing, you know, it's telling us to go. It's the right direction. It's the right road. We're turning. We got another bridge, and bro, this place looks beat down. And we're like, yo, are we sure? And I start looking at Alex. I'm like, Al, are you sure there's an Airbnb here? Because it looked like under like a rail track. And it's like homelessness over there, like beat down cars, graffiti, and it says turn right. And we're like, where's it telling us to turn right? We look, we're turning right. It's like another beat down place. And then we start driving through. We start seeing some townhomes and whatever. And we're like, okay. But it's like you're taking like a townhome, like brand built townhomes, and you're tossing it in like a neighborhood that just doesn't look like it belongs there. And you know what's the funniest thing is the next morning we see like this homeless guy just like walking by, right? And then the contrast was that you're seeing this white mom with a stroller and her dog jogging. And I could not just, I was like, yo, do you see how crazy this is? She has like the presence of mind to feel safe just to do this, to take her stroller and her baby and her dog for a jog in this neighborhood. And that's when I knew it was a wrap. I was like, it's curtains.
Yep. Yeah, that's going on here. You know, like I said, I'm in West Philly, so you know,
You're seeing
definitely the same thing. And again, it inspires me to talk about what I talk about. But yeah, that's happening here. It's happening in cities all over.
Man, honestly, the only thing I got beef with is them streets, bro. Like the amount of collision centers that was like on every corner. I'm like, oh, so this is like this is a trap.
It's a trap.
Y'all trying to
Oh, no.
y'all trying to trap us.
an insurance trap, man.
I would love to invest in one of those one of those collision centers. Listen, I'm like, I gotta find somewhere new. Like I love Philly, but I need a little bit more. I need a little bit more space. Like my car has been hit twice now while parked in the past like 3 months. So
God, whoa, 3. Yo, I was expecting like 2 years.
No.
3 months.
3 months, my guy. Holy
like the first
smokes,
time-
bro.
took my mirror off, you know, side view mirror. And then
Bruh,
the second time,
that's a sign, man.
yeah, man. It's like they're.
Come to Toronto.
I gotta make it out there, man. I gotta make it out there.
Hell yeah, Caribbean on the weekend. We got you.
OVO, everything.
Yeah, word. I'm about it.
Maybe come
sure,
for like a
for sure.
Philly Raps game. You know, you guys are rivals.
Yo, that'd be a good one.
Yeah,
Yeah.
see, what's it? I'm not even gonna do it. I don't watch basketball.
You know,
Owen's the
Embiid?
basketball guy. I was like, CMB get dunked on, but I was like, he don't get dunked on. No, he's not. You know what I'm saying? I was like, let me this. Facts, bro.
It's all
Awesome, man. Well, as we work towards wrapping up, bro, you know, what last message would you like to leave with our Black entrepreneurs listening?
good. Message for Black entrepreneurs: keep shining. For one, you know, I think everybody's got this light. You know what I mean? We all have these talents, these dreams, and like visions, and I think more of us need to just lean in and just try, right? Give it a shot, because you'll be surprised with just how far it can go, especially when you share your ideas and dreams with other people, especially with, you know, good fellas like you. It's like, you know, good things happen from that. And other people want to see you succeed. So I'll say, you know, keep shining. But also for me, you know, I play this dual role of like entrepreneur and investor, right? And I would love more Black entrepreneurs to do the same of build your own company. You are an entrepreneur, but also think like an investor, right? And know that your company, whatever company it is, it can invest. Your company can invest in other businesses. Like Bison Venture Partners, we invest small amounts of money into other small businesses, other startups, right? And the more we can do that, the more we can get to a point where we can build those conglomerates we were talking about earlier, right? Where we don't have to sell or ask for funding from larger non-black companies, right? We can go to our own community. So again, I think you got to think from both perspectives. Think as an entrepreneur, also as an investor.
Boom. With that being said, ladies and gentlemen, that wraps up the show. The hustle is what you can control. So control your grind and control your life. I'm Alex.
And I'm Owen Osinde.
Appreciate you, fellas. I'm Gary. Bison Venture Partners. Join the herd.
Let go. And that's the show, y'all. Peace.
Peace out, everyone.
Peace.